Get unlimited access to all of our CPE courses at www.teachucomp.com/unlimited CPE.
In this lesson, we will take a look at interest expenses that must be capitalized. The Uniform Capitalization Rules require any business which produces real property or certain tangible property to capitalize interest on any debt which is equal to expenditures. A business is considered by the IRS to produce real property or tangible personal property if the business constructs, builds, installs, manufactures, develops, improves, creates, raises, or grows the property. Capitalized interest is included in the cost of property produced and will be recovered when the property is sold. Partnerships and S corporations must also capitalize interest. If the Uniform Capitalization Rules do not apply to a business, then the business can elect to deduct interest depending on which accounting system is used. Under the cash method, only interest which is actually paid during the year is actually deductible. Businesses that use the accrual method may only deduct interest that has accrued during the tax year. Businesses are also prohibited from deducting interest before the year to which the interest applies.
Like what you see? Get unlimited access to all of our CPE courses at www.teachucomp.com/unlimited CPE.